Joseph Moore. Joseph, good to see you. How are you differentiating between what companies are going to benefit in this next leg of AI spend and how much?
Yeah, well, I think everyone's going to benefit. This is a very strong environment. And I think for the last 6 months, there's been this laundry list of concerns around Chinese competition.
Yeah.
Around competition, around issues with Chinese encroachment, hardware issues, product delays. And underlying that, there's been this very strong growth in tokens that you've seen. Usage of these AI models is explosive. We need a lot of hardware to support that. And we're seeing very strong conditions. I do think Nvidia is the best beneficiary. They have the highest percentage of their revenue from AI. But we really see strength across the board, and that's why we did raise targets everywhere. We're seeing strength in ASIC investing, strength in AMD, strength in the supply chain to support all of this. It's becoming a little bit consensus.
Okay.
Because we just heard from the spenders, but it is a very strong environment.
So where, if anywhere, is that benefit underappreciated? You got a name like Nvidia, which everybody already associates with AI, arguably, sure, Broadcom too, but there are some of these names like Marvell that are more involved in the guts of the networking of the data center that maybe this is priced in, maybe it's not. How are you looking at that?
Yeah, well, I think, look, the two companies that have the strongest position in processors are NVIDIA and Broadcom. And I think we all know that. I tend to think that NVIDIA is still a little bit underappreciated on a relative basis, just how strong their position is. But it's very strong for both. I think when you look at the AMDs, the Marvells, it's a little bit more of a lower ceiling, higher ceiling, lower floor. We're all trying to figure out where they sit. Marvell does the processors for Amazon's custom business. I do think there's some opportunity there. Their optical business near term should be very strong. And while I'm not maybe as much of a believer in some in their custom processor strategy, I think they're beating and raising here for the next couple of quarters around strong optical. And that is one that has gone a little bit out of favor as they fell short of high expectations in the first half of the year. But, generally expectations are quite high everywhere. And I think those expectations are justified. I wouldn't characterize any of these as undiscovered, but there's different degrees of enthusiasm at any point in time. And we're looking for the ones where maybe that enthusiasm is lagging a little bit behind as the market is strong for everybody. I think Marvell, I think some of the supply chain names like Micron are interesting in that context as well. Yeah,
when it comes to memory and storage, that's necessary to transform and support the data hunger for AI, both old data and more recent data. Are there opportunities there?
I think so. I think when you look at DRAM in particular, there's this specialty memory for AI called high bandwidth memory. And there's a lot of concern about some of the premiums are eroding there. Is it becoming more competitive? From Micron's standpoint, which is my company that I cover in that memory space, they're gaining share. And yes, it's becoming more competitive, but they're in a strong position. And because that's a growing portion of their business, even if there's a little bit of a narrowing premium, they're going to see margin accretion around all of that. So I do, we're equal weight to stock. We've got some longer term cyclical concerns, but I think from this short term, very strong surge in AI spending, I think people are a little bit underrepresenting their prospects. I think it's going to be very strong between now and the end of the year.
Due to significant selling pressure brought on by the jobs data, all of the semiconductor stocks appear somewhat endangered. Before we see a move to the upside at this time, the markets will need to stabilize. About an hour into the session, we are down 3.5%, indicating that the Nvidia market has gapped downward and truly collapsed. In actuality, this is not an Nvidia issue. This is more of a general response to the dismal job number. Having said that, I believe we are in a position where there are many buyers below. I will purchase after a bounce of some kind that creates a V on a short-term chart. It could have been a bit frothy, but I do think Nvidia keeps getting better. It's okay that it could have been a bit too much. I believe that a bounce at $165 followed by the 50-day EMA would be fantastic. Nvidia has been under increasing pressure from China, and not in a positive way. Due to what it describes as significant security vulnerabilities associated with the H20 chip product that Nvidia created especially to comply with U.S. export regulations, the nation's leading internet watchdog called in Nvidia representatives this week. The state media also didn't mince words. The People's Daily said it couldn't let contaminated semiconductors into its digital infrastructure in a commentary released on Friday, warning of possible chip backdoors that may cause a nightmare. In a clear response, Nvidia stated that cybersecurity is very important to them and that there are no remote access channels on their processors. However, given the current geopolitical situation, such assurance might not be sufficient. The messier part comes here. As part of a larger agreement involving rare earth magnets, materials essential for everything from smartphones to fighter jets, the United States agreed just weeks ago to remove limits on H20 sales to China. Following bilateral discussions in London, Treasury Secretary Scott Bessent declared that the magnet problem had been resolved, while Commerce Secretary Howard Lutnick presented the H20 resumption as a significant breakthrough. However, it's unclear if Nvidia has gotten the licenses it needs to export the processors now that Beijing is scrutinizing the H20 once more. Additionally, those sales may freeze before they even begin if China determines the H20 isn't technically or politically up to grade. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. Jensen Huang, the CEO, has been treading carefully in the interim. Huang resisted the notion that Nvidia would ever incorporate surveillance backdoors into its products, while praising China's AI momentum and national champions like DeepSeek, following a high-profile trip to Beijing. He referred to the proposal as bad business in addition to being untrue. However, the truth is that Nvidia's H20, which is already less powerful than its flagship GPUs, is now up against a political test that may be more significant than its technical characteristics. The US-China tech confrontation is evolving into a geopolitical negotiating chip, so investors may want to keep a careful eye on what happens next. One of the top stocks to purchase in the upcoming 6 months is Nvidia. A strategic partnership agreement worth $10 billion, $2.36 billion, was signed on July 29th between Nvidia and YTL Power International to deploy Nvidia's high-performance graphics processing units to construct AI data centers. The agreement also asks for the development of a big language model that is independent of Malaysia, according to Tengju Zafrul, Minister of Investment, Trade, and Industry. Furthermore, it has been stated that Nvidia and YTL would collaborate with local contractors, suppliers, and technology partners to create an AI ecosystem for the nation. Prior to this agreement, in December 2023, YTL and Nvidia announced intentions to invest $4.3 billion in cloud infrastructure and supercomputers for artificial intelligence in Malaysia. A global leader in networking and graphics processing, Nvidia offers GPUs for use in AI, gaming, high-performance computing, and other fields. The company's products are used in professional visualization, gaming, data centers, and the automotive industry. It's no secret that Nvidia is the most powerful corporation in the most powerful industry. The company's cutting-edge graphics processing units, GPUs, are packed into data centers all around the world, particularly those that are hosting the most sophisticated AI models available today. When it comes to providing the most cutting-edge GPUs required to support contemporary AI, no other chipmaker has been able to match Nvidia up to this point. Despite some progress being made by rivals like Advanced Micro Devices, Nvidia remains far ahead. In addition, it has a staggering amount of money and manpower to use to maintain its lead. Even while this would already be a sizable moat, Nvidia has a huge edge thanks to its CUDA architecture. Given its significance, investors still don't fully understand this crucial element, despite the fact that it is discussed. To put it simply, CUDA is a software layer that serves as the foundation for the majority of AI technologies. Companies who are currently part of Nvidia's ecosystem are unlikely to leave because switching to competing chips would necessitate a complete rethink of their workflow. Because of this, Nvidia's ecosystem retains customers who are prepared to pay more. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.